Please concentrate. Financial functions are one of the very important set of functions, especially the people, especially for the people who are into the finance domain. So today's topic financial functions, and the other one is protection. We'll cover elaborately. Let us look into the financial functions. See, as I told you yesterday, remaining functions, if you want to learn, you should understand the concept of Excel more. But relating to the financial functions, if you want to write the best formula, you should understand the concept of that financial, okay, category or maybe the nature. For example, let's say I want to calculate NPV. First of all, we must know what is the meaning of NPV. So I'll just note down all the functions which you can understand in a very simplest way. Okay. In Excel, there is a function named XNPV, introduced in 2010. Okay, but same thing like an NPV, but there is a difference. What NPV function does, this is a net present value, returns the net present value for the consistent periods. Returns the net present value for the inconsistent periods. There is a function named IRR. We all know it. IRR returns the internal rate of return. XIRR is exactly same. Returns the internal rate of return for the inconsistent periods. This is for the consistent periods. Nothing will be there in the function. First, we need to understand what parameters may be required to calculate. Based on that, we'll keep everything one after other in the syntax. To calculate the equated installment, we have a function in Excel named PMT, returns the equated installment. You cannot say monthly, you cannot say yearly or quarterly. That is based on what we are going to select in the parameter. PMT returns the equated installment. Then there is a function named rate. Okay, this returns the discount rate or interest rate. Then there is a function named NPR, returns the number of periods in which the equated installment will be paid. Then there is a present value, PV. What is the meaning of PV? Present value calculation, returns the present value. These all, if you remember, in our maybe, okay, commerce background, we learned at one or other place. Then when PV function is there, there is one more function named future value, returns the future value. We all know how to calculate present value as well as future value. Then there is one more function, CUMIPMT. Okay, this is actually, it returns the cumulative interest payment, returns the cumulative interest payment for the period, or else you can put it between two periods. There is one more function named CUMPRINC. All functions are same. If you look into these two functions, same arguments, everything is same except the name. If you look into these two functions, in case of PV, I take FE. In case of FE, I take PV as a parameter. In case of these two, these three, same parameters again. Okay. If you want to calculate EMI, then you need to have rate, number of periods, and present value. If you want to calculate rate, you need payment, NPR, PV. If you want to calculate NPR, remaining three parameters are required. As simple as it. Nothing more, nothing less. This returns the cumulative principal amount. Okay. Then there is one more function, IPMT. IPMT is basically, it returns the interest portion in the equated installment. Hi, good morning, Vinat. Just now I started. Please follow. Equated installment for the nth period. Why I'm writing the description, you'll get to know a couple of things out of the description when I start talking about the arguments and other things. There is one more function, PPMT. Same thing. It returns the principal portion and so on. See, these all are very important. At least we are going to look into all these 14 functions, 13 functions. Okay. Now this is what the result. Okay, what this function does. Now, what we'll try to see, to use the NPV function, manually, if I want to calculate NPV, what are the minimum parameters which are required? I'm sure there must be a discount rate, then there must be cash inflows or cash outflows. Why I'm keeping in the bracket? Because cash outflows are the negative. To calculate XNPV, that means the difference between these two, NPV we calculate exactly after 1 year. XNPV at different intervals. I'm getting the money into my company at different intervals, which is not 1 year. In those cases, we use XNPV. So the only difference between this and this, here extra dates will be there. Why dates are not there above? Because in that case, dates will not be there because cash inflow and outflow exactly coming after 1 year. That's the assumption. In case of IRR, what you need? I need cash inflows and cash outflows. I don't need any other thing. But XIRR, along with that, dates also I need because that is for the inconsistent periods. Now let's say today you visited bank and you are asking for the housing loan. Then bank calculates the housing loan and tell you, Sharon, you need to pay, this is the amount per month. Then to calculate that EMI, what are the minimum parameters banker is looking into? There are three important parameters. How much loan you are taking? That means present value of the loan you are taking. Next, what is the rate of interest? Do you agree with me? Yes. In how many years you are going to pay? NPER, number of periods. These three are the very much parameter. In some of the cases, maybe future value after end of couple of years, I may pay some bulk amount. That is also possibility. So if that is the case, future value, how much you are paying as a lump sum amount, that also we may put. But other than the fourth argument, remaining three is 100% mandatory. Generally, if you go for a loan, how much is the amount, loan amount? That's the present value. What is the rate of interest and number of periods? Now, for example, I can easily calculate like this. If I ask you how much EMI you are paying per month, and if I ask you when you are taking the loan, for how many years you are going to pay, then I can calculate the rate of interest easily. Obviously, right? These four are parameters which are together. If you want to calculate this, remaining three are required. If you want to calculate this, these three are required. If you want to calculate this, these three are required. And finally, if you want to calculate the loan amount, these three are required. So what I'll be doing, I'll just take remaining three. PMT is required, then NPER is required, then PV is required. For example, I have another three parameters. So what I'm going to do now, rate is also required. If I want to calculate present value, either you can have payment rate and NPR, or else Let's say after 10 years, if you have 5 lakh, today what is that value? If I discount it, so either you can take future value, or maybe in the equated case also you can calculate. So there are two cases you can calculate future value. If every month I pay, let's say it's like an insurance policy. Every month we are paying. After 10 years, how much interest I'll get, or after 10 years we'll get to know, okay, at the time of redemption, how much amount we are getting. That means after 10 years, the amount which we are getting is a future value. Okay, sorry, that, yeah, that's a future value. Then every month how much we are paying is the payment. Then rate we know, then NPR we know. Then you'll get how much is the present value of that. Or else if you want to know the rate, okay, which I'm getting, then number of periods we know, and every month how much you are paying, you know what is the present value of that value, then you can calculate rate. Anything is fine. So present value is exactly opposite. If I want to calculate present value, I need to have future value, I need to have present value, then rate, then number of periods. Okay, now this is cumulative interest payment. For example, let's say to file the income tax return for individual, July 31st is the last date. Suddenly on the last date, a client came to my office, individually he is, and he has given his form 16 or other details. And by looking into the form 16, I started preparing the return, and before just submitting the button, submit to the government, he said, Mr. Sharan, I forget to tell you that I am also having a housing loan. Every month I am paying the payment, EMI. Then I asked, what about form 16? It's not part of form 16. I did not mention in my company. Then I immediately asked the question, do you have the housing loan certificate? He said, no, Sharan, I did not collect. I did not know. Do you have the bank statement? No, instead of going into bank statement, okay, we'll look into the other methodology. But definitely he know how much is the amount he has taken, when he has taken, how much is the rate of interest the bank is charging. I'm sure these details and how much is the EMI also is paying every month. So every detail But the only thing is he don't have a breakup of how much is the interest, how much is the principal. Simple. But if everything put together, I want to show into one section, my job is simple. Anyway, he's paying EMI. So EMI into 12 is nothing but per 1 year. So I can put the total amount. But in the income tax, it is little different. Interest you have to bifurcate, principal you have to bifurcate. Interest is okay. Interest can be claimed as a deduction under section 24, and principal can be claimed as a deduction under section 80C. If that is the case, I must need to have the difference between what is the interest, two components, what is the interest and what is the principal. In those cases, we use the cumulative interest payment. It is exactly the same. But along with this, we may have two more parameters. What is the starting period and what is the end period? For example, in our case, he has taken the loan on 1st April 2017. But we are filing income tax return from 1st April 2018 till 31st March 2019. If that is the case, from which period to which period I have to calculate? 13th period to 24th period I have to calculate what is the interest portion and what is the principal portion, right? Now, cumulative principal, same thing, same details. In this case, it will give you interest, it will give you principal. Let's say suddenly I want to know current, let's say after a couple of months I made the payment. Suddenly for 1 month I started going towards down. I want to know how much is the principal now it is reducing every time. If that is the case, that month, if whatever the EMI you are paying, you must have what is the principal component, what is the interest component. So we have a function names exactly the same. But in this case, I'll not calculate from one period to other period, but I'll calculate for PR. PR is nothing but the nth period. Just I'll tell the Excel, okay, NPR means how many periods you are going to pay. PR means which period you are calculating. Same thing. Okay, all are very simple. These all are the parameters. Okay, to calculate even the manually. Now we'll try to see. Okay, now we'll try to see how to use all these one after other. We'll try to take a small assignment also on this. For example, uh, there's a let's take the particulars. Let's say I've taken the loan amount. That's nothing but a present value. Interest rate of interest. That's nothing but a rate as per the language of Excel I'm talking. Or else you can directly take PV, which is a loan rate, NPER, number of periods. Number of periods I'll be paying the loan. Then equated installment. I've not taken equated monthly installment because that we can decide. Okay, for example, I want to have equated yearly installment. Okay, sorry, equated yearly installment. Let's say I'm going for a loan of 5 lakh. Now, if you see, this is what my loan rate of interest is basically, let's say 8.75%. Let us assume number of periods is basically, uh, let's say 10 years. I'm just keeping years. I can convert into months, or else you can directly keep 120. Both are one and the same. Now I'm just taking years so that I'll get to know, because yearly installment I'm calculating. Now, friends. Yeah. Now, what is the function we have? PMT. The beauty of the financial functions is you need not to think so much whether Excel is looking into second column, first column, what it gives, and so on. Whatever the parameters it is asking, just keep the parameters one after other. As I told you on the first day itself, parameters are nothing, arguments are nothing but the parameters which are required to calculate a particular function. Now, let's go to the rate. This is the rate of interest, comma. Number of periods. This is the number of periods, comma. Present value. This is the present value, comma. Are you going to pay lump sum anything after a couple of years? No. So let's ignore the future value. The type of this is whether the interest is accrued at the end of the period or beginning of the period. By default, it accrued at the end of the period, so I'm not considering that. So if you want to make the payment every year, sorry, you need to pay 77,000. You can ask the question, Mr. Sharon, why this is in negative? Correct? Because from my angle, 5 lakh today I'm getting into my pocket, which is positive cash inflow, and every month the money is going out of my pocket, which is a negative. It makes sense. For example, from the bank point of view, bank is giving the loan, it goes out of his pocket. So every month then my PMT must become positive. Absolutely. That's a positive for him, right? So just to avoid the confusion, I'm just giving minus symbol before PMT so that, excuse me, so that confusion will not be there, right? Anyone having any question? Very simple. Now, for example, I want to calculate quarterly. How to calculate? Same parameters, same formula, but only difference is now my rate will go divided by 4 because I'm calculating the simple interest. This into 4. Do you agree with me? Yes. Because if it is 8.75 per annum, then how much per quarter? 10 years I'm paying, that means how many periods I'm going to pay? Quarterly, 40 periods. This is what the amount which I need to pay. Now, let's go into the monthly. Same thing. But what may change? Instead of divided by 4, it may be divided by 12. It may be divided by 12. Okay, so into 12. This is what the EMI. Now, if I ask you the total payment, the total repayment, including the interest and principal. Okay, then how much? This into this. Do you agree with me? Yes. This into this into 4, this into 12. Absolutely. See, since you are paying, okay, monthly, you are paying little less with compared to paying annually, because after 1 year you are making the payment. Till that time the interest will be little go ahead. Here every month your principal portion will get reduced. That's the reason, okay, this is preferable with compared to this. Now, for example, this is what we learned, right? Now I want to calculate the cumulative interest payment, or else first let us look into the cumulative interest payment. So what is the function? CUMIPMT. What is the rate? This is the rate, comma, just follow the syntax. What is the NPER? Number of periods, comma. What is the present value? My present value is this, comma. What is the starting period? Now in this case, let us assume my starting period is 1. What is the ending period? My end period is 10. Friends, can you tell me, if I calculate cumulative interest payment starting period from 1 to 10, that means for the entire repayment, how much is the interest I will get? Now, comma. Here in this case, it's not optional. Type is, as I said, Excel is having so many, okay, interpretation issues. You can ask the question, when PMT function is having optional, why not this function? Okay, at the end of the period. So Excel is keep on changing. So a couple of things had to okay, modify. So this is the one. So this is what the interest you are paying total. Let's say if I put the same thing, cumulative principal, CR, PRI and C, what is the formula I should write? Exactly the same. Control C, Control V. Now I just need to put PRI and C. That's all. I'm sorry. I is excess, right? So check it out. Wow. Exactly. Your principal portion must equal to your loan. Then now let's have a check. Check is nothing but this minus this must be 0. Simple, right? So, oops, yeah. So that minus this must be 0. Now, what I need to do, just copy the same formula, paste here. You know what may change? What may change? It will just change divided by 4 into 4. How many periods? This into 4. That's all. Exactly the same. Control C, Control V. Now you need to put CUM, PRI and C, as simple as it. Exactly the check. Finally, let's look into the same here. Now what I need to do, I am not going to calculate for quarterly, so I'll put divided by 12 into 12 into 12. Try to understand. This is starting period. I want to calculate from the first period till the last period. This is the amount. Now I'll just keep the same thing. Control C, Control V. Now instead of IPMT, I'll just put PRI and C. Exactly the same check. Okay. So this is the way it calculates. I'm just trying to search for a document for quick glance. Just give me 1 sec, everyone. I'll show you practically how this works, because I must have a document from the banker. Recently, we have taken the loan. So I'm just trying to search. Just give me 1 sec. If I find it, that's quickly I'll show you. If not, we'll ignore. I think I kept the same at my house. What I'll do, I'll take a snap of it if it is available today, and I'll send across to you. Generally, the sanction document of the loan will be having what, how much loan is giving, how many years you're going to pay, and what is the rate of interest. You exactly put the PMT function, your EMI will exactly match. So I don't look into the every month bank statement or anything. Even I don't wait for bank provisional certificate every year, how much loan I'm getting, how much interest I paid for that year, and so on. What I'll do, I'll make it table. So let's look into that. Okay, for example, we'll make something like this. Everyone, please have a look. Okay, this is what the EMI table. Okay, so how much loan I have taken? That's a 5 lakh. Then what is the rate of interest? 10.5%. Then how many years I'm going to pay? That's nothing but number of periods. How many? It was 10 years. For the time being, we'll keep in our case 5 years, just for the understanding purpose, so that the number of periods will be little less. Now I'm going to calculate the EMI. So PER, what is the meaning of PER? Period. So from first period, second period, third period, and so on, how many periods I'm going to pay? I can just simply select this. Now let me drag it down. Now you can just go here, 60 periods I'll be paying, right? Yeah. So I'll be paying 60 periods. Please have a look. Okay. So yeah. Now it's a period. Now how much EMI I'm going to pay every month? Simple. Equal to PMT. I'm keeping minus because PMT may result positive, negative because this is a positive. So just to make it positive, I just put minus before the formula. Now, what is the rate of interest? This, but it's a monthly I'm calculating divided by 12. How many periods I'm going to pay? 5 years, but into 12 because 5 are years, every month I'm paying, and this is what the present value. You have to make sure that you need to give the dollar symbol because if I copy paste that below, that should not change automatically. So let me select this, let me select this, enter, copy and paste. Okay, I'm sure we all know that EMI means equated installment, which must be exactly same, right? Great. Now, for example, out of the EMI, what is the interest portion and what is the principal portion, right? So if I want to know what is the interest portion, what function we have? Equal to, you can use two functions, cumulative interest payment, but just interest payment for nth period. In the case of cumulative interest payment, what you are going to take, I'll take starting period is 1, ending period is 1, right? In this case, starting period is 2, ending period is 2, but unnecessarily why you need to increase the arguments? There is a ready-made function we have, okay, that is ppm, sorry, this is interest, right? IPMT. Again, I started with minus because again, IPMT function gives you the negative value. So rate is this, okay, fix it, divided by 12, comma, PR, this extra argument. Which period you are calculating? I am calculating for the first period, comma. I'm not going to give the dollar symbol because if I copy paste this automatically should become 2. Number of periods, these many periods, okay, freeze it into 12, comma, then this is what my loan amount, close bracket, enter, copy and paste. Okay, see, obviously in case of equated installment, your principal amount will go down and interest will go up, as simple as it, right? Oh, sorry, principal will go up, interest will go down. I'm sorry, other way around I covered. So this is exactly the same function. That's the beauty of Excel. If you learn one function, other functions are very simple. Now it's PPMT, right? Now see, principal, initially I'm paying very small amount. Now if you see, little huge amount I'm paying, right? See, initially 6.3, then yeah, initial interest is okay, very huge, then principal is small. Slowly I'm increasing the principal, so because my written down my closing balance of principal is going down, so this is what the last bit. So what is the check here, whether this is correct or wrong? Validation controls are very important at every aspect of your Excel, so that if something goes wrong, we can just immediately rectify there itself. See, absolutely everything, my balance is 0, right? This is the way we calculate. Let's say if I want to calculate Let me save this file. Batch 9. This is day 15. Financial functions. Right. So I want to calculate cumulative interest. To calculate cumulative interest, why should I go for CUM IPMT? Even manually, I can do that, right? Manually, generally, how you do this? Generally, we put this, then above this plus, sorry, above cell plus this cell, then you will copy and paste. Friends, I don't prefer these type of formulas because especially if you see there are a couple of standards we need to maintain if you want to maintain the best spreadsheet. Generally, one column must have the same formula. It should not have different formulas because user always confused. In this case, this is what my first formula, and this is a different formula again. So there is a difference between first formula and second formula. So instead, what I can do, what I'll do, okay, to have this cumulative, I can use this simple function, sum. Everyone, please concentrate. Sum this, column this. What I can do, I can freeze the C4. Just give the dollar symbol for C4. Just copy paste. Both are on the same. Now what I'm trying to do, I'm just summing this one cell. It is an elastic. It just keep on increase. Starting from the same point, end point is still the cell. End point is still the cell. When I keep on growing, even my range is going up. Very simple. Now, if I want to calculate for the cumulative principal, exactly the same methodology I can follow. What is that? Equal to sum of principal. Okay, then give the dollar symbol for this, then enter, copy, and paste. Absolutely. Okay, this is what a manual method I have calculated. Now, is there any method through formula also I can calculate? Yes. Now let's take cumulative interest and cumulative principal for as per the formula also. How to do that? Simple. Equal to cumulative interest payment rate divided by 12 comma number of periods into 12 comma present value is this comma future end of the okay, start of the period. What is the starting period is this. The starting period is standard. I'm giving a dollar symbol because if I copy paste, I want to still take from first. And set end period is this again in this case because I want to get only for the first period. Is it interest is accrued at the end of the period? Yes, close bracket, enter, copy, and just paste below. References are very important. See, in this case, where to take dollar symbol, where you should not take dollar symbol is very important. Now, what I'll be doing, I'll just simply take Control C and I'll take Control V. Friends, I'm just giving you different methods. Okay. If you do the previous one, this is not required at all. Just to give you the conformity that, okay, Excel is working correct. So that's all. Now I can simply do this with the comma format. Now what I'll do, I'll have a check whether my formula method as well as this both are same. This minus this, okay, plus this minus this. Absolutely, Control C, put this down and give the same format, right? So this is the method which I'm following to calculate the cumulative interest payment and just interest payment for nth period and so on. If anyone having any question, please let me know. And one more standard generally which I follow, I don't keep the totals at the bottom because keeping the total at the bottom is always confusing and I need to scroll down every time. So that's the reason I keep the total okay on top. Because another problem of keeping the totals at the bottom is we don't look into the total every time, that we don't think that there is a total every time at the end of the okay data. So we'll use some of the cases, sum function and other functions. Maybe in some of the cases, even the total will be part of it when we don't realize. When the totals are on top, at least you are a little cautious that, okay, so totals are there, I should ignore these values in my formulas. Now, I need to, that's all. I think these are the just totals, remaining everything is cumulative. If anyone having any question on this, please let me know. Now we'll go into the other functions. Functions uses. Till here, if anyone having any question, please let me know. I think there's a hand raised by Govardhan. Govardhan, do you have any question? Because you raised your hand. Gopal?
Yes, sir.
Govardhan, I'm sorry.
Sir, can you hear?
Yeah, you can
Yes,
speak.
sir. Can you hear me, sir? Hello.
We are
Sir,
I'm
can
not
you hear
hearing
me,
Govardhan. One sec. Hello. You can speak now.
sir? Actually, you said that if we take loan in the starting of the year, we'll be paying yearly interest, sir. If we take loan in the middle of the year, means for the first year, we'll be paying for only for 6 months, no, sir, interest.
I
For
did not
example,
get the
period
point.
one is there, no, sir.
Okay. Year one is there in this
Period one is
case.
there, no, sir.
Correct.
Okay.
After
If
the
we
end of
take
the
loan in
period.
the between the, for example, in September, uh, after the, it is for only for 6 months, sir. For regarding 6 months, it is for 12 months, no, sir. Period one. If we take
Correct.
loan in the month of September, we'll pay interest for only for 6 months, no, sir. How will you calculate that, sir? And we need
Same
to get
thing.
same that cumulative interest, cumulative principal.
Same thing. For example, if you wanna have taken the loan in the month of September, so consider this as September, October, November, December, January, February,
Okay.
March. Let's say 6 months. Let's say you're taking the loan in the month of October. Then I'll take these 6 months. I'll just add these 6 months. This I'll show into my section 24. This 6 months I'll show into my ADC. What is there? See, to
Sir,
calculate the
not like that.
EMI.
Okay.
Sorry. Yeah, go ahead. Go ahead.
Interest. Only in period one, it is for 6 months, and remaining in period two, period three, it is for 12 months, 12 months, sir. How to calculate that?
You are paying yearly or monthly, first of
Yes,
all.
sir. I am paying yearly, but only in the starting period one,
Oh,
I am
okay,
paying only for
okay.
6 months, sir, because I have
Got your
taken in the
point.
month of September.
Okay, got your point. What you are saying is you need to pay the equated installment yearly, but since you are taken in the middle of
Yes,
the
sir.
year, for the first one you need to
Yes, sir.
pay for whatever the balance.
Yes,
if
sir.
if that is
Yes,
if,
right.
if that is the case anyway, Vinith is there who is mostly handling the financial related, but my suggestion if that is the case is you calculate, okay, for 6 months period, okay, for 6 months
Okay.
also it is exactly
Okay.
the same way.
Okay.
What I'm going to do, total interest how much it is, this is for 1 year, right? Now you put divided
Yes,
by
sir.
into 12 into whatever 6 months or 5 months divided by 12. Then you'll get for that particular period
Okay.
how much is the rate. Then you calculate it. Once you make the
Okay.
payment, it is like this. Let me
Okay.
do this. Okay, very good question. Paste it. Vinath, if I go wrong, please let me know because I'm not expert in financials related, not Excel, but concepts. Okay, like you. So you are expert. So I'm taking your help. So in this case, if I'm not wrong, what I'll be doing, let's take same amount of loan we'll take. Got the same
Okay,
amount
sir.
of parameters.
Yes, sir.
Let's take the same parameters.
Okay.
Okay. So now let's take period means, okay, exactly what? So let's take November. Let's say we are taking the loan, right? Is it correct? November 19.
Okay, sir.
Then and so on. Let us take month. Let's say, just for the example, we'll take till December, just for the example. Now, till here, I need to pay, okay, at a time. Is it? Okay. See, I think November to then 1st April 2020, then 2nd April. Now, what I'll be doing, just give me one sec. Sorry. 31st 3 2019. Then from here, I'll just try to take, let's say I'm paying in 5 years. Okay. So this is the only one where 6 months are there, right? From
Yes.
here, it is
Right.
1 year. Is it correct?
Yes,
Yeah.
sir.
So my first payment will be till 31st March 2019. This is what my, okay, first payment. But to consider the first payment, here I have 6 months. From here, we have 12 months, right? This is, let's say, 5 months when we take the loan in the month of November. Then if that is the case, what I follow? I'll follow for PMT separately for this. Now let's take the rate. Uh, into 12 divided by, sorry, into 5 divided by 12, comma. Number of periods, I'll take 1 because anyway, uh, I'm not going to anyway select the initial date in this case. When I just allow 1, I'm just trying to take 1 point here. So if it is 5 divided by 12, then comma, then present value is this. No, this will not work because, okay, Vinith, 1 second. Just Vinith, you can also speak. You can. It is unmute from my end. No, I'm just trying to see. For the first month, there is no actually. Uh, there is no reference to the month, so that's the reason I have not taken. Otherwise, what you are trying to suggest me that I'll take the starting period. Now let's put this. Okay, this is starting period. First November 2018 or 19. I'm sorry. And this is 20. Oh, okay. Then when I drag this down, this year wise. Now this is from 1st April 2020, and this is, let me drag this down. This is what the period. Govardhan, year we need to pay for per year, is it?
Sorry, sir.
Here we need to pay per year. The installment is
No, sir.
per year.
Only for next onwards per year, sir.
Okay, here only it is 6 months.
Yes, sir. 6 months or five
Okay,
months. Part of the
yeah,
year.
I got the point. Then if that is the case, what I'm going to do basically, I'll calculate the EMI as if it is for 5 months. Okay, so what I'll
Okay.
do,
Okay.
if total number of years are 5, then into 12 is basically 60. If I divide with 5, that means I'm going to pay 12 periods. Okay, got it. So what I'll do, I'll put 12 here. Then I'll just put the reference to this. This is the one, comma, this is the one. Okay, then close bracket. If I enter, see, for the first 6 months, you need to pay this amount. Go then, just have a look here. Okay, this is what the
Okay.
total payment. First 6 months, sorry, first 5 months. What I have done is, if 5 months
Okay.
is one period, for example, if we consider, then what I have done, I've taken, then we need to
Okay.
pay in 12 years, 12 periods, right? 12 into 5 is 60, so exactly
Yes, sir.
5 years. So I've taken 12 and I calculated.
Okay.
Now in this, I'll calculate the interest portion
Okay, sir.
and the portion. What is the interest portion out of this? Exactly the same. Control C and put control V. Now IPMT I'll calculate, but extra one argument I'm going to keep is period. I want to have first period, right? This is what exactly the same thing I'm going to do for the principal, right? Then I'll just put PPMT, right? These two put together, let me have a very quick check. Okay, this minus this, right? Then balance principal. Balance principal, let's say total is this minus this. Do you agree with me? Now considering this,
Yes.
next 4 years I'll pay. Now I need to pay 4 equated installment. Okay. Now considering this, if I want to pay 4 years, then what I need to do, I'll take the same thing, PMT equal to PMT. Now, what is the rate of interest? This, comma, number of periods, another 4 years. So I need to take a comma 4, then present value is this actually. Because after 1 year, this is what the balance which we are having. So enter. So this is what I'm going to put. Maybe this is the exactly interest one which I'm going to take. But the only difference between here and here is then in this case it is 4, then PER is 1 first period, then this one, then exactly the same. Is it going wrong anywhere? Gordon, I followed a small technique that because anyway first period we
Okay, sir.
cannot consider because it is period wise, right? So I've taken
No.
the
Okay,
period
sir.
itself is 1 year, 5 months
Okay.
here. So I calculated, then I reduced this principal, considering this as a principal. Based on that, I calculated the remaining.
Okay.
Is this not the
Okay,
correct?
sir.
So I'm just thinking, no, let us have a validation control. So this is 4 years. Okay, 4.5 years basically this is. Then you need to calculate last 5 years. Again, last year also you'll have the same problem because when I take the loan for 5 years, I hope you're getting
Okay.
my point. When I take
Yes, sir.
loan
Yes,
for
sir. I'm getting.
5 years, last year
Okay.
also only 6 months will be there in the financial year. I'll put the same calculation
Yes,
here.
sir.
I will close it. I think this is the best way as per my knowledge. Anyway, I'll get back to you on this tomorrow. I'll do little R&D more on
Mm.
this. Vinod, do you have any question?
Okay, sir.
Is my method wrong? Vinod? No. Do you think this is fine? Or is there any alternative? You can tell me the method I can put into the formula. Okay, great. Thank you. Yeah, I'm just asking you because you are already into this financial statement analysis, sorry, financials related and uh, personal planning and so on, right? Great. So this is the one, the EMI table. Now let's go to the functions. Fine. Now it's very simple. For example, now I have same thing is there and equated installment is also there. Yeah. Now these are the same figures I'm going to take. Yes, it seems someone raised the hand again. Gordon, do you have still any question?
No, sir. No, sir.
Great. Okay. So now my question is to have a now all other parameters are there. Now all other parameters are there. How to calculate the present value? Now I've given you equated installment. It's very simple. So PV, what is the rate of interest? This divided by 12 monthly, this into 12, then PMT is nothing but the EMI, this. If you have any future value, you can keep it. Otherwise, you can ignore. Okay, close bracket and exactly. Okay, these all are just other way around functions. For example, now I want to know the same thing here, but this is 5 lakh. Now, let's say interest is not there. I want to calculate the interest. What is the method I follow? Equal to rate, number of periods into 12, comma, PMT, this, comma, present value is this, close bracket. I'm sure now you'll get an error. Can anyone guess why this error is? How can my present value and payment both are into positive? Okay, so PMT, let's say put minus. Okay, so this is per month into 12. This is per annum, right? So now what I'll be doing, I'll just copy this and I'll paste here. I'll just copy this and I'll paste here. Let me copy this and paste here. Then let's say years are not there. Now equal to same thing. What is the function? NPR, number of periods, rate divided by 12. Then PMT, this, comma, present value. This may have the same problem. So what I'm going to do, I'll put minus. So you'll get exactly 120. I need to put divided by 12 because I need to have in years. This is the way all four we calculate. Anyway, how to get the equated installment we already covered. So this is equal to PMT, then rate divided by 12, then this into 12, then this is the one, right? So, so if you know two parameters, other parameters are very simple, right? So this is what about, I think most of the functions, whatever required I have covered. And let us look into the NPV and IRR. Okay. So I hope most of us knows how to calculate the net present value and internal rate of return. If I take the rate of interest, let's say 10%, let's say first year, let's say second year, let's say third year cash inflow of 15,000, let's say there's minus 20,000, let's say 5. Okay. Manually, how we calculate? I think we learned that is actually first we need to calculate the discounting factor. So what is the discounting factor? Equal to 1 divided by 1 plus this percentage whole to the power of 1, right? Now we just need to copy and paste. Now this is for second year, this is for third year, right? So this I need to multiply, sorry, general discounting factor, we keep 4 digits. This I need to multiply with this. Yeah. Now, okay, this is what discounted cash inflows are, discounted cash outflows. So this is just year cash inflow. In bracket, whatever I keep, that means it's outflow. Okay. So the total of this is nothing but my NPV. This is a manual method I calculated. Okay, not preferable when you know the functions. Just for the understanding the concept, I kept this. Now NPV, let's make with the formula very simple. Equal to NPV. Now rate is this, comma, value one. Instead of giving this, comma, this, you can take this. Okay, exactly. This is the way we calculate. Now let us look into a situation where in case of inconsistent periods are there. Now I'll take the same thing. Now what we'll do, we'll take the example. Okay, we'll take we'll take this one, rate is same. Now let's say date is there. Inconsistent periods, let's say today there's a payment. After 85 days, I got one more payment, or else inflow or outflow, or else after 276 days, and probably after this 485 days, maybe after this 92 days, maybe after this 78, sorry, uh, 194 days. Now, I need to have cash inflow or cash outflow. Now you can just put randomly. Okay, there is a 15,000, then minus 16,000, then there is 12,000, then there is minus 10,000, then there is 18,000, then there is 15,000 which went out. Okay, so there is a cash inflow and outflow continuously. Now, in this case, how you need to calculate normally? First, you need to have a difference from first day till the payment. Then you need to have 1 divided by, here I have taken 1, right? This one is indicating exactly after 1 year. Now you have to go manually with fractions. Instead, what I can simply do, I can put my NPV. My NPV is very simple. Now it's not just an NPV, it's an XNPV. X is an indication that it's for the inconsistent periods, equal to XNPV. Friends, XNPV introduced in 2010 version. If you are using 2007, this function you will not find. Now what is the rate? My rate is this, comma. What are the values? These are the values, comma. What are the dates? These are the dates. Close bracket. Enter. See, 5,182 is 1. For example, just to make it small, let me put 15,000. Or let me put 10,000. Or let me put 12,000 and so on. Oh, let me put 14,000. Okay. So yours is just 231 NPV, right? Now, let us use the same funda and start calculating the IRR. Now, IRR is basically exactly the same. What is the meaning of IRR, general practical sense? IRR is at the point at which the NPV is 0, net present value. IRR is internal rate of return. IRR at the rate, IRR is the point at which the NPV must be 0. Right? So I'll try to, now this is 864, right? Now I'll take IRR equal to IRR. Now my NPV must come 0. Okay, these are the values. Let's select, close bracket. If I enter, see, why? Oh, I have taken the reference to B fact. That's I surprised. Friends, don't confuse. Okay, because it is very negligible 0, because in no case it happens. So probably what I do, I'll just make it, instead of 15,000, I'll just take it for 4,500. Yeah, check it out. Absolutely. Now, let me copy this and paste below. See, hey, how come? Yeah, this is 2 and this is 3. Yeah. See, if you keep your rate of interest maybe at the percentage of 4.67, then your NPV is exactly 0. If, for example, this is not 4,500, this is 4,600, then it's slowly going down. Obviously, when you're getting more money, the rate will go slowly down and so on. When I put 5,000, okay, it's almost negligible, almost negligible. Okay, 4,500, let us keep it. Okay. So IRR is the point at which your NPV is 0. Now let's calculate the same IRR in this case. In this case, it's XIRR basically, because inconsistent periods are there. Now what I'll do, I'll just simply take the same formula. XIRR values are this, comma, dates are this. It must come. See, absolutely. If you see, 7.8.74 exactly our NPV is 0. Okay, that's the way we calculate these two. If anyone having any question, please let me know. Okay, just to give you a small example, I'll give you one assignment. In fact, you can do it, that will not take more than 1 minute. Okay, if you really understand these concepts. Just for the sake of assignment, I'm giving. So let's put this down. Yeah, the assignment is very simple. Let's say this, in fact, one of the company asked me what formula we should write. What's the purpose of NPV? What's the purpose of NPV? NPV is basically, okay, just to know whether I'm getting In this assignment, I'll explain. Okay, you will anyway get to know. Okay, just give me 2 minutes. Okay, for example, uh, let's say Vinat. Vinat, I'm just using your name without your permission. Okay, excuse me. Let's say Mr. Vinat is looking for the investment in his for his new venture, or else I'll take my name here. Mr. Sharon is looking for a new venture for his investment for his new venture. Then he approached Mr. Vinat, okay, for the loan, looking for the loan. Okay. Then Mr. Vinat agreed to pay, agreed to lend rupees, let's say 5 crore. If Mr. Vinat deposit the same money in the bank, he may get 8.75% as an interest. Okay. Then he asked Saran how much I'm going to get every year. Okay. Now Mr. Sharon said he will pay the loan in 8 payments, the schedule as follows. Year 1, 2, 3, 4, 5, 6, 7, 8. After every year, in 8 payments, after every year, or else 8 loan in 8 years. Payment after every year. Okay. Payment will happen after every year, like that, 8 payments. So, you know how much amount he is going to pay in the first year? He said he'll pay 0. Second year 0. Third year 0. Fourth year 0. From 5th year to 8th year, he said, I'll pay X. Okay. Then, friends, now I'm asking you, what is the value of X? What must be the value of X so that Mr. Vinod can accept the proposal? Let's say, Vinod, I'm asking this question to you. When you will accept this proposal? Now what we need to do, we should calculate X value. Then we need to put the NPV for this entirely. Now my NPV must be 0. That means when I put the same amount in the bank, I'll get 8.75%. Now I'm calculating whether here also I'm getting 8.75% or not. At least 8.75% I should get here. That means my NPV must be here in this case 0. I hope you're getting my point, right? Vinat? So NPV purpose is basically, let's say if the bank is paying me every year, let's say 8.75%. So that means today, if you calculate the NPV keeping that as an interest, exactly 0. That means my 1 rupee today is equivalent to 1.08 in next 1 year, after 1 year. That means this 1 year the inflation is 8%. Okay, that is what the interest we call. Okay, now this I'm giving you all as an assignment. So just to cross check whether you get the correct answer or wrong answer, it's very simple. You put the X value, then you calculate the NPV for this, then you should get the answer 0. As simple as it. So what is X? That's all. Okay, so when you have a time, see this I want you to do by just writing a single formula. Please write single formula in single cell. Manually, don't do that. Okay, that's all. If anyone having any question, please let me know. I think I've covered little elaborate the financial functions. If anyone having any question, please let me know. Anyone? Am I fast? No, right? So yeah, great. So let me just save this file and close. Now let's go into the very important concept, the second part of today's session. Friends, what we'll do, we'll quickly take 2 minutes break and we'll come back. Okay, then I need at least 20 minutes to half an hour to cover the protection. So just give me quickly 2 minutes. Yeah, let us welcome back. Friends, protection is very important, especially because we are dealing with so many Excel files where probably I want to only have an access when I keep the server. I don't want other people to open. Or maybe they can open, they can just view, they cannot edit. Maybe they can open, they can edit, but they cannot change the structure. So when I say the protection, protection is basically can be given for three things. I can give the protection to the workbook, protection of workbook. Second one, protection of worksheets in the workbook. Then protection of cells in the worksheet. Why I'm giving all these separately? Because let's now look into the scope of the protection. In this case, the scope is for the entire file. Okay, to open the file, this works. In the second case, though I am protecting the sheets, but the scope is for the workbook, all the sheets in the workbook. In the third case, though I am protecting the cells, but the scope is only for one worksheet. So if you want to give a protection for the third one, for every sheet you have to do it separately. Okay, so try to understand. So the scope is very important. Now, let's try to look into one after other. Protection of workbook. What's the meaning of it? If we protect the workbook, if user protects the workbook, the other person, no other user can open the same until provides the correct password. So there are two methods, there are two ways we can protect workbook. One navigation is, what is the first one? You can go to file tab, in that info section, in that protect workbook, in that encrypt with password, in that confirm password, and click OK. Or else, while you save the file as, save as, what is the shortcut for save as? F12. Are you finding tools group? Yes. In that, are you finding general options? Yes. In that, are you finding file to password to open? Yes. Then enter password, confirm, and OK. You can go into any of these two methods. Let's look into the first one. I'll just go to file. I'll just go to where I said info. Let's go to info. Then I'll go to protect workbook. Are you finding encrypt with password? Just click it. Just give the password. Then confirm the password. Now let's go back. Now this is one method. Or else, while you save as, are you finding tools? Yes. In that, are you finding general options? Yes. Let me click this. Then by default password is there because this file is already having a password. If not, you can even click here. Let me click OK. Now I can give this as day 14 protection. Save, close. Now what I'll be doing, let me open this file. Now let's go to, where is that? Day 14. Actually, it must be day 15. Okay. See, now I'm trying to enter, it's giving me the password. Please remember that you don't have a forget password option here. Okay. If you forget the password, practically not possible. Okay. I'm not saying impossible, but practically not possible. There are pro applications in the market where you need to make the payment and they'll crack the password, but practically it's almost impossible. Okay. This is one way. If you want to remove the password, same method. Just go here, go to the file tab, go to the info section, go to the product with password. Are you finding your password? Now save it. Just click OK. Now go here, save and close. Now let me open the file, protection. Now it will not ask for any password, right? That is what protection of the workbook. Now, second one, protection of worksheets in the workbook. What happens if user did this? If user protects the sheets, protects the worksheet, okay, this allows the user to, okay, save the structural changes. What do you mean by the structural changes? Structural changes means anything with respect to sheet. What activities basically user can do with respect to sheet? He can insert the sheet, he can delete the sheet, he can move the sheet, he can copy the sheet, he can change the tab color, then he can rename the sheet, he can hide the sheet, he can unhide the sheet. If you do anything with respect to this, that means user is doing a structural changes. If we protect the structural changes, to protect structural changes, changes to the workbook, okay, then we use this option. Basically, this is, if you give a protection, user cannot do anything with respect to the sheets. Now for this, there is a navigation. Go to the, okay, ribbon menu. In that, go to review tab. In that, let's go to, okay, protection group. Let's go here, protect group. In that, let's go to protect workbook. Friends, don't confuse. In that, select structural changes, then enter password. Okay, friends, from 2010 onwards, 13 onwards, there is no relevance for the Windows. So once you go here, by default, it has selected structure only. Earlier, we used to have an Windows, because earlier I can arrange 4 windows at a time, one after other. Okay, now to give the password for this sheet, what I am going to do, go to protect worksheet, workbook. Then are you finding protect workbook for structure? So give the password, confirm the password. Now, when I'm trying to insert the sheet, just go here, insert. Okay, it's not enabled. Delete the sheet, not possible. Go to the format. Rename, no. Move or copy, no. Tab color, no. Hide or unhide, hide sheet, no. Unhide sheet, no. Nothing. Even you right click here, nothing is possible. Insert, delete, rename, move, copy, tab color, hide, unhide, nothing is possible, right? That is what the advantage of doing the protection of the worksheets in the workbook. Now these two are very simple. Okay. Last one is most important. Just give the password. Now, what is the third one? Protection of cells in the worksheet. Okay. If user gives the protection to the cells in the worksheet, Other user cannot do any changes in the sheet. Okay, he cannot changes means he cannot do a cannot edit in the sheet, any cell in the sheet. Okay, now to understand this, you need to understand couple of important concepts in Excel. Couple of important words. There is a concept in Excel, locked cell. There is one more concept, unlocked cell. There is one more concept, protected cell, and there is one more concept, hidden cell. Okay, try to understand. Locked cell, unlocked cell, protected cell, hidden cell. By default, every cell is a locked cell. Every cell in Excel is locked. But generally, what we think, by looking into the names, we think by default every cell is unlocked, which is wrong. Now, unlocked cell. We can unlock the cell manually. Then when every cell is a locked cell, but still I can go and write whatever I want, right? Then what is the meaning of protected cell? Very important. Only locked cells can be protected. Protected cell means user cannot edit these cells. User cannot edit these cells. Hidden cell means hiding the formula bar content. Okay, we'll go one after other. First of all, we'll try to find the difference between these two. If protected cell means user cannot edit, then what is the concept of locked and unlocked? I'm coming to the point. Only locked cells will be protected. What about unlocked cells? So unlocked cells cannot be protected. Let's say out of entire Excel, user manually unlocked A1 colon A10. If we use protection on this sheet, user no user, okay, user cannot edit any cells except A1 colon A10 because A1 colon A10 are unlocked means unprotected. Try to understand. Now you will get to know the difference between locked and unlocked concept. Why they introduced the concept of locked and unlocked? Excel is saying, Mr. Sharan, in the sheet, lakhs of cells are there. How do I know that for which cells I should give the access and which cells I should not give the access? You should give me the indication. The indication what you need to give, by default I protect every sheet, but if you want some of the sheets to be accessed, then you please unlock it by default. Okay, so this is the remark section. Now let's go and take the case study. Now this is very good. Now there are again three types of protection are there. What are they? Allow the user, okay, to the, sorry, don't allow the user, protect the cells by not allowing the user to the protected cells. That means once I protect, which cells can be protected? Locked cells. So once we protect user, he cannot even keep his cursor. That means, okay, means user cannot keep his cursor, into the protected cells. That is what the meaning of first one. What is the second one? This time, protect the cells by allowing the user to the protected cells. But user cannot edit. He can just go into that cell, but he cannot edit. But there is a problem in the second case. When I allow the user into the protected, when I allow the user into the protected cell, can I even see the form bar content? Yes. For that, we have an option, third one. Protect the cells by allowing the user to the protected cells, but by not showing the form bar content. Okay, this is the meaning of this. Now let's concentrate. Let us take one example and based on that will work. Now we'll take an examples. Concentrate carefully. Now I have company, then Jan and so on till September. Yep. Now I'm taking A, B, C, D, E, F. Next 15 minutes, very important, please concentrate. Every point is important here. Now just to make it random equal to random between 100 to 1000, enter copy special values. If I want to have a quarter one total, what I can do, I can simply alt equal to control C, then I can just one sec, sorry. I want to fit the same data, control C here. So right click, paste selected area, control right. Yeah, absolutely. This is Q2 and let me control C and this is Q3 and I want to have the total is nothing but alt equal to absolutely it has taken in between wherever the values are there. And sorry, I'm just taking this. Just give me one sec, guys. Okay. Sorry, friends. Yeah. Now I wanna have. I'm just making the example to give you how exactly this works. Now this is what. I'm sorry. Just give me one sec. I just taken the totals here. Now we'll try to format this. Okay. Now I think we have used the shortcut names F5. Very important shortcut. Now, just to make it in a nice format, what I'll be doing, I'll just go to special. First, I'll select all the text. Text means other than numbers. So let's click OK. Now, bold. Now I'll just go here. I'll just put into some yellow color. Now I want to select only numbers. What I need to do, just go to formulas, only numbers means other than text. See, these are the only numbers. You may be thinking these are also numbers, right? No, those all are not numbers. Those all are the constant, those all are the formulas, but these all are the constant numbers. So now let me put this into something with different color, maybe like this. Okay. Now, remaining area is having constants, right? So F5 special, oh, rand between, I did rand between, right? Yeah. Now let's go to F5 special. Now I want to have the constants which are numbers. Now you will find everything. Now let me put this a small gray color. Okay. Now this is what my data on which I'm going to apply my protection carefully. Okay. Now there is a data. I said by default every cell is a locked cell. How do you know that? Just go here. Just go to the format. Are you cell for locked cell? It got enabled. Or else just to prove correct, right click, then go to the format cells, then go to protection, click lock. Done. Or else you go to any cell. By default, every cell is locked. Or else you select the entire data, right click, format cells, lock, full tick. That means every cell is locked. Now, if I directly go to review tab and protect the sheet and give the password, that means every cell is a locked cell and every cell will become a protected cell. See, I cannot write anywhere. I may go into that cell, but I'm trying to write something. It is giving me a pop-up. It's correct because every cell is a locked cell. And since you applied the protection applied for every cell. Okay, let me give the password. Now what is my target? I want to give user wanted to allow, okay, to edit gray color cells. Gray color cells. Okay. That means these are the cells. These all are the cells where I want to give the access to the user. He can go and change whatever he want. In the protection also, he can go and do whatever he want. Then if that is the case, first what I need to do? If that is the case, first you need to unlock these gray color area. First of all, how to select gray color area? F5 special. Gray color area is a constant, which is numbers. Select it, right click, format cells, and tick. So that my gray color area is unlocked. Now, gray colored area is unlocked. Okay, what is the meaning of it? Now, only locked cells can be protected, as I said. Yes or no? Yes. Now, what are the locked cells out of this entire sheet? Except this gray color area, everything is locked. Means except the gray color, everything is locked. Okay, now let's go and apply the protection. Now let's look into the first type of protection. What is that? We give the password. Now allow all users of this worksheet to locked and both unlocked. No, I don't want to allow to locked cell. What I told you, the first type of protection, I'll not even allow the user to go into the protected cell. I'll not even allow the user to go into the protected cell. That's the reason I'm saying allow all users of this worksheet to only unlocked. Now let me click OK. Confirm the password. Have you observed a small instance which happened just now? Earlier, my cursor was here before the protection. Once I click OK, my cursor automatically came here because this is a protected cell. I cannot even keep the protected cell. Then how can I keep my cursor? So if I'm trying to keep my cursor here, nowhere, though I'm accessing this entire area, it's not allowing me. If you just see my cursor in the O column, it is there. I'm trying to keep the cursor, it's not allowing me at all. But in this area, you can do whatever you want and so on, right? Now, let me unprotect. Password is incorrect. Why? I'm sorry, I think I've given a wrong password. Yeah. Now, this is first type of protection. What is the second type of protection? Same thing. But this time, I will allow all users to locked as well as unlocked. If you allow to locked cells, what happens? Locked cells are protected, so he can go into that cell, but he cannot do anything in that cell. Now I'll confirm the password. Now, can I go to A1? Yes. Can I edit anything? No, because it's a protected cell. You are just allowed to go inside, but there is a problem, as I told you. If I allow to protected cell, even I can see the formulas also. Check it out. But can I edit these formulas? No. Why? These all are the protected cells. You cannot do that. So unprotect sheet. Now, third one. This time I want to allow, but I don't want my user to see the formulas. So first what you need to do, go to F5, go to special, go to formulas, select all. Now, right click, format cells. Are you finding hidden? Click this. Now click OK. Now how many types of sheets how many types of cells this sheet is having? This sheet is having three types of cells. One is locked, the other one is unlocked, the other one is locked and hidden, right? Okay. This sheet is having three types of cells. Locked cells, second one, unlocked cells, third one, protected cells, sorry, locked and hidden cells. Now let's write what happens. Locked cells. Okay, this becomes protected cells. These cells can be protected. Also allowed. Also, we can allow the users to go into these cells while protection, while in protection, but they cannot edit. Obviously, he can go into that cell. I can allow him. Okay, but he cannot edit. Unlocked cells. Unlocked cells means these cells cannot be protected. Means user can edit the cells. What is the meaning of last one? These cells can be protected. Also, we can allow the user to go into these cells, but by not showing the formula bar content. Why? Because I said hidden cells. So indirectly, the meaning of hidden means hiding the content in the formula bar, as simple as it. Now, what I'm going to do, I'll just do the same thing. Let's go to the protect sheet. Now, give the password. Allow all users of this worksheet to both lock and unlock, no problem. Let me click OK. Now let me confirm the password. Now, can I go to this cell? Yes. Can you tell me what is this cell? It's a locked cell only, also protected. But I ask Excel to go into this cell. I can. But can I edit this? No, because it's a protected. Can I edit this cell? No, this is also protected. This is also protected. Can I edit this cell? Yes, this is not protected because it's unlocked. But can I see the formula per content? Yes, because formulas are not there. I have not given hidden for these things. But when I come down, let me go down, say down. Are you finding anything in the formula bar content? Nothing, nothing. Because these cells are hidden also. Though I'm allowing the users to go into that cells, but user cannot see the formula set. Okay, that's the meaning of this. I think we have covered protection also elaborately. In the protection, there are a couple of other things are there, small things you can understand easily. Okay, you can just allow the user to format the cells, maybe format the columns, rows. Some of the cases in the protection, insert is not possible. So you can allow the user to insert the columns, insert the rows, delete the columns, delete the rows, and so on. Okay, so you can start looking into the other things anyway. Tomorrow, if time permits, when I talk about maybe the scenarios, I'll tell you what is the meaning of edit scenarios and so on. That's all for today. I think both the concepts today I went little elaborate. If anyone having any question, please let me know. Let me save this file and close. Friends, that's all for today. Okay, if anyone having any question, please let me know.